Do you want to understand how much of the market's gains you can expect to appreciate without taking on any market risk? Stick with me, and in this video, we'll explore index annuity rates. Hi, I'm Jared with Carlin Financial Group, and for the best retirement information, make sure you subscribe to our channel and remember to click on that notification bell to be notified when we release new videos. So, you have an annuity retirement plan. Or you're at least considering an annuity as part of, or have already purchased an annuity as part of your retirement plan. And you want to understand how annuity interest rates or gains are credited. In this particular video, we're going to focus on index annuities because of their unique features that prevent you from ever losing money, but still allow you to appreciate gains linked to the market. For starters, it's important to understand that when you're allocating money inside of your index annuity, you have options. Normally, there's always a fixed option. And under that particular allocation, you receive money just like you would in a CD or a savings account. There's a stated fixed interest rate that's credited to your account at the end of your term. So let's say the first year of your contract. You'll never earn any less than that stated rate, but you'll never earn any more either. The other option in an index annuity is obviously an index. Depending upon which contract you choose and which company or provider you decide to go with, your indexing options will vary, anywhere from one to a number of indexes available under each contract. To give you an idea of what I'm talking about, check out this list. You can see here that we've got everything from traditional familiar indexes such as the S&P 500 or Dow Jones Industrial, all the way to some more unique volatility control indexes or even indexes specifically designed for particular sectors of the economy. Now, as you can see, there are a lot of options available for you, so it's important that you make some considerations and choose the one that's going to best suit you and your particular needs. Do you have questions about how these indexes may work? Drop us a line down below and we'll do our best to answer them for you in a future video. Now, how do we calculate an index annuity interest rate? That's a great question. For starters, if it's a fixed account, or where our allocation is to the fixed account, that's easy. We know exactly how much money we should expect to earn in the following year. However, if we choose to allocate our money to an index, there tends to be a couple of other things involved. Firstly, if the result is positive, then your annuity will be credited with interest up to a predetermined amount. If that result is negative, then your annuity value doesn't change or decline. Also, there will always be what's known as a participation rate. Now, your participation rate on a given index could be anywhere from, let's say, 0 to 100+%. Some indexes allow you to achieve 100% of their return of the index you are linked to. Others, sometimes more than 100%, sometimes less. For our example, let's say that we choose the S&P 500 index with a 50% participation rate. What that means is, if the S&P returned, let's say 15% over the term we're referring to, 1 year, 2 year, depending on what's spelled out in your contract. Now, at a 50% participation rate, that means we're allowed to participate in 50% of those gains, or 7.5% return, that would be credited to the portion of your account that you allocated to that particular index option. Another very common thing that we see in annuities, in index annuities particularly, is a cap rate. What is an index annuity cap rate? Well, it's simply something that's paired with your participation rate and does exactly what it says. It caps how much you can earn. So if we take a look back at our example, we have the same 15% return, the same participation rate of 50%, yielding us 7.5% potential return. But in this example, we have a 5% cap. So with that index annuity cap of 5%, in this particular example, your account will be credited, or the portion that you've allocated to this index will be credited with 5% growth. Finally, There's a third option that we see commonly, and that pairs a participation rate not with a cap, but with a spread, or you might think of it as a fee. Let's take a look back at our example again. Under the same circumstances, with a 15% return on our index, a 50% participation rate with a 7.5% potential gain. Under this example, we also have a 1.5% spread. Now that spread is deducted from your potential gains according to your participation rate. Again, in this example, 7.5%, we simply subtract the spread of 1.5, and this portion of our account that we've allocated to this index option will receive a 6% credit. So as you can see, when presented with an index annuity, your allocation options are really quite varied depending upon the contract you select. You could allocate a portion to the fixed account, a portion to one index or the other with perhaps a participation rate or a cap or a participation rate accompanying a spread. With all of these options available to you, it's important that you understand all of the intricate details and moving parts before you make a selection unique to your individual situation. If you'd like some help with those decisions, you can click on the link down below in the description to apply to become a client. Thank you for watching today, and if you enjoyed this video, share it with a friend and remember to subscribe to our channel so you can be notified when we release new videos. And remember, live today, plan for tomorrow.